Now speaking, Howard Tubin, Vice President, Investor Relations. Calvin McDonald, CEO of Lululemon, opened the first quarter earnings call by discussing the company's current financial position and outlook. He went on to explain that Lululemon had a strong first quarter, with total revenues increasing by 20%, comparable sales growing by 28%, and net income increasing by 30%. Additionally, he discussed the company's initiatives to drive sustainable long-term growth, such as their focus on digital transformation, global expansion, and their commitment to their community and culture. McDonald also mentioned that Lululemon has made significant investments in technology and infrastructure this year, which will allow for greater scalability and more efficient operations going forward. Lastly, he highlighted the company's plans to launch new products in the coming quarters, as well as their commitment to delivering value to customers and shareholders. Now speaking, Calvin McDonald, Chief Executive Officer. We are committed to developing a deep understanding of the local market, selecting the right partners, building the right infrastructure, and creating an engaging community model. With that, I'll turn it over to Megan for a deep dive into our financials and our outlook. In quarter one, Lululemon delivered strong results across both the top and bottom line. Revenue increased 24%, with comparable sales increasing 16% in stores and 18% in e-commerce. North America revenue grew 17%, while international revenue increased 60%. In Greater China, revenue increased 79%. EPS was strong, increasing 54% to $2.28. The strength was driven by revenue, gross margin, and SG&A all coming in better than guidance. Lululemon's community-based model allows them to connect uniquely and authentically with their guests, driving incrementality of spend and increasing LTV as guests engage more with the brand. This is supported by their Essentials membership program. Stores provide connection points within local communities across the world and act as hubs for local ambassadors and fitness studios. They also serve as focal points for local events ranging from run clubs and other sweat sessions to parties and community celebrations. Guests responded well to Lululemon's spring merchandise assortment, with women's bottoms up 22%, driven by dance studio pants, Align mini flare and wide leg, and soft stream bottoms. Men's ABC, Commission, and Pacebreaker franchises were popular, as were bags, backpacks, and duffels and accessories. Footwear innovations included Blissfeel running and Blissfeel trail shoes. To celebrate their 25th anniversary, Lululemon has launched initiatives such as their Further program, which focuses on closing the sex and gender data gap in endurance performance, introducing new product innovations, and providing give-back components to support young women. They also tapped into dupe culture with their Align legging dupe swap event in Los Angeles. For upcoming quarter two, Lululemon will expand golf and tennis collections with versatile styles, launch second installment of Get Into It campaign with shorts and on-the-move styles for both him and her, and expand men's train tops with new styles using DrySense fabric technology. Be Planet initiatives include a capsule collection made with plant-based nylon, partnership with Samsara Eco to scale circularity through textile-to-textile recycling, and like new initiative. Internationally, Lululemon's business remains strong in quarter one. They entered Spain last fall, opened their first store in Tel Aviv, and plan to enter Thailand with their first store in Bangkok. They have a goal to quadruple their business outside North America between 2021 and 2026. Now speaking, Megan Frank, Chief Financial Officer. In Q1, Lululemon achieved strong performance across all parts of the business. Total net revenue rose 24% to $2 billion and comparable sales increased 17%. Gross profit for the quarter was 57.5% of net revenue compared to 53.9% a year ago due to lower air freight costs and regional mix. SG&A expenses were 37.4% of net revenue compared to 37.7% last year, coming in better than expected due to leverage on higher than planned sales. Operating income for the quarter was 20.1% of net revenue compared to 16.1% in Q1 2022 and net income increased 54% to $290 million or $2.28 per diluted share. Inventory grew 24%, in line with sales growth, and capital expenditures were $137 million for the quarter. For Q2, Lululemon expects revenue in the range of $2.14 billion to $2.17 billion, representing 15 to 16% growth, and gross margin to increase 200 to 220 basis points relative to Q2 2022, driven primarily by lower air freight costs. SG&A is forecasted to deleverage by 190 to 210 basis points due to strategic investments in brand building and community activations. Operating margin is expected to expand 10 basis points, and EPS is expected to be in the range of $2.47 to $2.52. For the full year 2023, revenue is expected to be in the range of $9.44 billion to $9.51 billion, gross margin to increase 180 to 200 basis points, SG&A to deleverage 150 to 170 basis points, operating margin to increase 30 to 50 basis points, and EPS to be in the range of $11.74 to $11.94. This guidance excludes the impact of any future share repurchases, and capital expenditures are expected to be approximately $660 million to $680 million. Now speaking, Calvin McDonald, Chief Executive Officer. Lululemon is off to a strong start in 2023, with the company's product pipeline, community-building approach, international growth prospects and initiatives to grow brand awareness all contributing to the success so far. The company remains optimistic about its ability to deliver on the goals set forth in its Power of 3x2 growth plan. The leaders and teams at Lululemon have been credited for their continued effort and dedication in delivering these results. Raymond James analyst Rick Patel inquired, "Can you provide more detail on the revenue beat and where you have the most confidence as we look ahead for the rest of the year?" Calvin McDonald replied, "The drivers of our business pre, during, and post the pandemic are still very relevant today. Our D2C omni-operating model, product driven by our innovation platform of Science of Feel, non-seasonal products, frequency of new drops, community connection initiatives, and essential memberships program have all been key components to our success. Our focus on product versatility, active and healthy lifestyle, convenience, and physical, mental, and social well-being continues to separate us from our peers and fuel our performance. We've seen strong growth in North America and double-digit growth internationally, with balanced growth across gender, category, and activity. With our product pipeline, I expect this trend to continue." Barclays analyst Adrienne Yee inquired, "Calvin, what pricing strategy do you use when entering new markets and how have you been able to increase prices in those markets over the long term?" Megan, "How does segment margin vary between North America, APAC/China, and EMEA?" Calvin McDonald replied, "We enter markets with premium positioning and aim to sell at full price, using markdowns only as a means to manage seasonal shifts in product. We maintain parity across markets, making adjustments when needed due to local competition or other factors, but with the same intent of selling full price and moderate discounting." Megan Frank replied, "We saw great expansion in our operating margin quarter over quarter. North America remains our most profitable region, followed by APAC and then EMEA, with China having the highest margin rate within APAC." Robert W. Baird & Company analyst Mark Altschwager inquired, "What changes, if any, have occurred in the mix of North American and international revenue guidance since 3 months ago, and what have you learned from activation events in China about the brand's perception in new markets?" Megan Frank replied, "Thanks, Mark. We saw strong growth in Q1 with 24% exceeding our expectations. We are guiding for 15 to 16% for Q2 and 16 to 17% for the full year, both above our Power of 3x2 targets. We see meaningful opportunity across North America and international, particularly in China." Calvin McDonald replied, "Our go-to-market strategy in China is focused on building relationships with local communities, either through ambassadors or events. We've seen success from these activations and they are helping to grow brand awareness, which currently stands in the single digits. Our stores are outperforming expectations in both Tier 1 and Tier 2 cities. We have 101 stores with plans to open more this year and next. Our men's and women's business mix is similar to North America, and we're seeing good reception for our performance and premium apparel offerings across lounge and social wear occasions." Bank of America Merrill Lynch analyst Lorraine Hutchinson inquired, "Megan, can you elaborate on the investments you are making and how they will help increase brand awareness in China?" Megan Frank replied, "In terms of SG&A investments, we are seeing strong top-line growth and air freight costs have recovered. We plan to focus our investments on 3 key growth areas: market expansion in international regions, improving guest experience, digital capabilities, and guest support, brand awareness activities, and capital expenditure depreciation." "What was the second part of your question, Lorraine?" Calvin McDonald replied, "In response to Lorraine's question, I'd like to emphasize that our stores are important vehicles for brand awareness and consideration, but we also invest in local campaigns and leverage digital channels, such as WeChat and CN. Our team on the ground in Shanghai is executing initiatives like Worn by Us, Get Into It, and more to drive growth in Greater China and Mainland China." Telsey Advisory Group analyst Dana Telsey inquired, "What impact is the 430 basis point freight reduction having on the margin, and how is this reflected in average unit retail, AUR? How have the extensive product innovations this year been received regionally and globally?" Megan Frank replied, "Thanks, Dana. We anticipate air freight to be down 190 basis points for the year, which is 50 basis points higher than 2019. We saw a 430 basis point product margin expansion in Q1 due to air freight. However, we expect the year-over-year comparison to become more moderate as the year progresses, with Q4 being close to flat compared to last year. We will continue to keep a close eye on opportunities there. For our strategy won't be materially altered, and I'll let Calvin take the last part. Calvin McDonald replied, in terms of product newness, our global assortment strategy drives the same momentum across every market and region. There are a few nuances by market, such as fit, which we designed into our leggings, bras, and men's bottoms in APAC. Additionally, our footwear is only available in mainland China, the UK, and North America. Seasonality is also a factor. We can also see differences globally based on the power of social media in certain platforms. For instance, US-based social influencers have a larger voice in some markets than in others. Overall, our main message is that outside of fit, our global assortment strategy is more similar than not. Citi analyst Tracy Kogan inquired, could you provide an overview of the progression of the quarter month by month and comment on any fall-off in the U.S. business? Additionally, what are your current views on the competitive landscape and macro backdrop in the U.S.? Megan Frank replied, thanks, Tracy. We saw double-digit comp increases each month of the quarter, with February as our strongest month followed by April and March. Despite the 24% sales growth in Q1, we are pleased to be able to guide for 15 to 16% in Q2 and 16 to 17% for the full year. We feel well positioned as we move into the balance of the year, considering multiple scenarios. Calvin McDonald replied, in terms of competition and macroeconomic factors, we have remained consistent with our approach over the past 2 years. We are monitoring the actions of our competitors, particularly when it comes to pricing. Last year we took a strategic decision to keep price increases minimal, allowing us to continue our full price selling even during times of heavy promotions by our competitors. Going forward, we anticipate further discounting in the market, but we are well positioned and have an impressive pipeline of new products for the back half of 2020. Our guest metrics have been strong in Q1, and we will continue to plan for multiple scenarios and adjust as needed. J.P. Morgan Chase & Company analyst Matthew Boss inquired, Calvin, can you provide insight on the North American core consumer and global momentum you've seen in May? Megan, what trends have you seen with full price selling and better than planned inventory? Does this create potential opportunity for markdowns in the back half of the year compared to last year? Calvin McDonald replied, our guest metrics remain strong. Transactions by existing guests increased 22% and transactions by new guests increased 28%. Traffic was also strong across both channels with stores up over 30% and e-commerce up approximately 30%. We continue to see healthy new guest acquisition, high transaction rates and engagement with existing guests. Our brand awareness and consideration is low and represents a significant opportunity for our business. International revenue is 16%, representing another avenue of growth. Our omni-guest relationship and strategies allow us to grow our online business, regardless of shopping channel. And our direct-to-consumer model allows us to have unfettered relationships with our guests. Megan Frank replied, we were pleased with our markdown performance in Q1, which was flat compared to 2022 and slightly under 2019. We expect this trend to continue for the remainder of the year, bringing them back to 2019 levels. We also saw a strong top-line performance in Q1, along with positive full-price trends that we will be monitoring closely. Wells Fargo Securities analyst Ike Boruchow inquired, can you provide an update on the markdown expectations compared to 3 months ago? Also, what is the potential for air freight upside in fiscal 24? Megan Frank replied, I'm pleased to report that we saw a significant improvement in markdown performance due to increased top-line sales, which resulted in an outperformance in Q1. We anticipate this trend to continue for the rest of the year. Additionally, air freight expenses are 190 basis points lower than last year, but still 50 basis points above 2019 levels. We are committed to recouping all of these costs over the long term and will continue to look for ways to optimize our performance. Morgan Stanley analyst Alex Stratton inquired, can you explain the factors that led to an increase in margins of hundreds of basis points since pre-COVID levels? Did you observe any deviations in purchase behavior across the quarter based on household income level? Megan Frank replied, we saw a positive trend in our guest metrics this quarter, with existing and new guests both exceeding 20%. Can you remind me of the second part of your question? Morgan Stanley analyst Alex Stratton inquired, what are the key factors driving the increased margin levels compared to pre-COVID? Megan Frank replied, our operating margin is steady compared to last year and our gross margin has improved due to fewer store openings and increased investment in digital initiatives. We have also seen cost savings from economies of scale and higher than expected revenue. Goldman Sachs analyst Brooke Roach inquired, can you elaborate on how you are thinking about balancing new innovation within key platforms versus building out new product platforms? How should we be thinking about the timeline to replace pre-pandemic inventory turnover rate? Calvin McDonald replied, "Hi Brooke. We take a strategic approach to our product, focusing on hero items, franchise expansions and newness. This quarter we upgraded our Pacebreaker short and introduced the Align dress, which was very well received. We also launched footwear last year as a test and learn, and have seen positive results so far. We'll be launching additional franchises later this year that we're excited about." Megan Frank replied, "We expect our inventory to be at approximately 20% of our total by the end of Q2 and then in line with sales for the remainder of the year. We have seen some improvement in our supply chain and lead times, but we are not back to our historical levels yet. However, that is our goal over the long term." Piper Sandler analyst Abby Zvanieks inquired, "Can you provide insight into the growth of the other segment, specifically what is driven by Lululemon Studio versus other components? Also, can you provide any subscription, loyalty or other numbers related to this segment?" Megan Frank replied, "In the other segment, strategic sales, seasonal stores, and outlets make up the majority of the revenue. Early statistics indicate that these segments are driving material revenue growth." Calvin McDonald replied, "Our recently launched digital app, Lululemon Studio, provides guests with access to the same content as our hardware purchase without the cost. We've seen great success with essential memberships, with over 8 million users after 6 months. The membership program, along with Lululemon Studio and other initiatives, are driving both LTV and incrementality. We're excited to see continued strong momentum and growth in the essential membership base."